Hello and welcome. This is episode number 2 for detailed altcoin technical analysis, keyword technical. Go over very little bit of the fundamentals within this video, but take a detailed look at it. This one will be ticker symbol DGB. And when we look at this on coin market cap, and at 2.1 cents, down 2.79% on the day. 346 Satoshi against Bitcoin, also down. Its market cap is in at $221 million, and it trades at about $1.8 million a day, or about currently 300 Bitcoin, ranked number 48 amongst the cryptocurrencies on the coin market exchange. Circulating supply of 10 billion and a max supply of 21 billion. As far as where you can find it traded, its main market would be on Bittrex, as well as that on Poloniex. 838,000 on Bittrex, so it's got a little less than twice the volume. And then there are other places as well, but the largest non-Bitcoin exchanges, you got a foreign currency of some sort at TRY, but Ethereum only trading at 30,000 a day on Bittrex, so it's mainly one traded. The highest one by US dollar is in at 18,000. So its primary trade is against Bitcoin. But just because it's very difficult to trade this against the dollar, hence there is no US dollar tether exchanges that will trade this amongst, at least not as of yet. Don't be surprised if in the future it will on sites like Bittrex and Poloniex. And if you wanted to do so, it's just a double act in the sense that if you're going to, say, sell this, you would sell this to Bitcoin and then buy US dollar tether with the Bitcoin, or the true US dollar, either or. And then when you want to buy it back, you would sell your tether style fund for Bitcoin, and then of course buy the DGB. So there's 2 extra transactions if you want to play with it against the dollar. We're looking at price action on the daily chart going back to about November, which had the run up all the way up to about 13 cents, has pulled back as deep as 1.5 cents, almost 1.6, better number at, even north of that number. Rallied up to about 5.2, now down to 2.1. So like a lot of them, big volatility. But if I scroll back even further, we can see that this had an amazing run last March, going from 00021 to single O 61. Tremendously large gain. That's about a 300x. Okay. But what has it done within that 300x gain? It originally held this area in here. Then this rally occurred, which broke out above here. So in a situation like this, when you have a big move, which obviously that's bigger than big, but you get the point. And then you have your correctionary move and a long-term one, and this by certainly is that. Then you've given a lot of time for the market to digest the gains. And it hasn't had any major sell-off since the biggest rally, or since the biggest highest price, definitely not the biggest rally, but since the rally in here. Of course, it was bigger. We'll take a look at this in Bitcoin. It was the biggest one in Bitcoin, at least. Well, logarithmically, I'll show you 2 different charts on Bitcoin versus DGB. But anyway, as far as the one against the dollar is concerned, it has its rally. It pretty much is a matching high for the most part, with a very good pierce above. But it's a matching high. So therefore, because of that fact, and it spent more time from ending here, starting in here, staying and holding above the 5.1 cent mark. It didn't do that much in here. It didn't stay above 5 cents for that long. But now, after this move, the key thing is holding and staying above what the last key level. And to me, it's right here. So I'll just continue to draw this line in. And thus far, it has done so. Am I concerned about it breaking down below in here? The answer to that is no. In fact, sometimes I think that might be an expected thing for two reasons, and they work together most likely. Notice before that it had this level of support within this range. So this little move here, albeit it didn't have that big of a price correction below the support, it had a lot of time correction amongst it. So in a situation where maybe it spends a decent amount of time at this level again, or it has some sort of price V-shaped move where it goes down even below this level of support, and then it comes back higher. Well, the reason I say that is because it seems more and more these days in crypto space that before a key big move, either up or down, happens, that a move in the opposite direction is going to precede such an event. Sort of like how this event happened, how it broke down below this support, and again, it had a time correction resisting an area of big support. So if it's going to have a big gain, don't be surprised if beforehand it ends up breaking a key level of support. And right now that key level is just at now, which is the resistance. And I'm going to move this here so we can see the dates from last summer and fall. So that is the US dollar chart. I'm now going to transition this into that against Bitcoin. And as viewing this on a daily chart, I got these lines in. I'll explain them in a little bit. But it found support pretty much to the number. The low for this session was 386. That was 3 basis points below this number. And then it rallied up to the 18 of lows, and it resisted it for over a week before leaving it a few days ago, and is looking like it's in process of not finished its decline in making a new leg lower. Is this a buy time? Well, it's already there for a new leg. Yes, I think I can get a better leg, or you could consider, if I buy here, maybe wait until like 300. That's my type of strategy. I bought last at 360. So I'm not going to buy again until 310 or lower, closer to 300. And what we can do is we can take a look at some Fibonacci. What we're going to do is we're going to take a look at the lows. The lowest price in here I see at 222, and it goes up to 529. The main two key numbers I'm looking at is three numbers really. 38.2 and the 61.8 comes in at 309 and 300, and Fibonacci downside at 130. So then, let's take a look at 380 and 309. 380, which sort of coincided within this level. It was a pierce above on this case. Regardless of the fact, that area was not held and has had a very noticeable pierce below. So that gives you reason why this should go to 300. Because we have Fibonacci at 309, and it usually pierces below. So my next spot that I'll be looking to buy will be at around 304, 305. Now, as far as Fibonacci downside is concerned, I'm looking for a down move, which is from the January highs going down, which is what it did here, to a rally, which is basically what we'd call a bear market rally if such is the case, meaning if the Fibonacci doesn't support and this previous low doesn't hold, with 118 being a key number below. Also, I got 815 and 56 on here as well. But its number is in again at 130. And I would even be considering it's going to pierce down to even below the 118 number if it does break down below that support mark. If you want to know more about fundamentals, there was a video on JSnip4's channel, well over an hour, I think, or close to an hour. Either way, it's a longer video, which has an interview from people amongst the team. So if you want fundamentals and just another way of looking at it, I'm here only to provide chart action. ideas of how I'm trading it, because for me, I'm going to buy low and sell high like I do everything. So as it stands now, I've just recently purchased, I get at 360. So if it goes up to like over 400, I'm going to sell some. And if it goes to 300, I'm going to buy, and won't do anything until the next. So if it goes to 300 as my next play, I'll look to sell that above maybe 370, 380, or even 360. And then of course, if the upper move happens and I sell, well then I'll look to buy back lower or wait for another sell opportunity higher. Anyway, let's move on to more of this data. And there is a total of 6 lines in. We're talking Fibonacci retracement. Now the logarithmic scale, if you look at the bottom right here, I got this in blue. It doesn't work too well with the Satoshis when the lowest numbers are like tiny, like below 100. So therefore, this is not a pure logarithmic scale. If I show you such that works, I'm going to show you coin market cap. Now I had to stop the tape or the video for several minutes, so I don't know exactly what sentence that I just left off, but I realized that I'm talking about the log scale within DGP via coin market cap. And some things to notice is the log scale that this one has. Not shown, the log and linears are on the right, upper right parts. When we see it on a log view, this does a 10x gain against Bitcoin here, and another 10x from that point. So that becomes greater than a 1000x move from the late 2014 lows and the highs from earlier this year. We also can see the symmetrical pattern that has been developed. This level of support matching several times hit amongst resistance. Thus, this last low is a higher low, and it's expected to be so coming from there, because whenever you have a gigantic move, you always expect that the next low, whether it be bullish or bearish, to be higher, as is the case. So if it's bullish, it's going to correct for a little bit more, basically in between these lines of between 100 and 1,000 Satoshi, and really 800 and change. We'll get to that in a little bit. And then on a bullish level, eventually get above it, make it to previous high, and then soar and make new highs, or thus at least pretty much one leg higher from this point. Because what we wanted was for this level of resistance to become support. In the future, on any breakouts, it's going to be this level here that you're going to want to have as support if it has a new leg higher. And of course, like I mentioned, that this move is both bearish and bullish to happen. It became that of a lower high. However, if the market just starts going up like this, I'm not going to count this as that much of a high, although this would be a higher low. Regardless of the fact, the market is in a symmetrical formation, which means it's making higher lows, or you're able to draw an uptrend line, and it's making lower highs, or you're able to draw a downtrend line. If we draw it with exact straight lines, which I can do on this paint program, I'm going to do such. And for now, you can do it around here, but I'm just going to leave it at the lowest end at this point. Now this one has already broken, or it's pretty much still in its decisionary mode. If it's not going to do anything but just stay sideways like this, all you have is 2 peaks, 2 points here at the top, and then the April lows. Or the April highs, or the January highs rather. So the summer highs and January highs. That's all you have is 2 points at this. But now if I do it this way, that high in here becomes that of now 3 hits within this area. But regardless of how I look at it, it is now at a moment of what I consider that of D-Day or decision day. And it doesn't last a day. For whatever time frame you are looking at, sometimes it's over 15, 20 minutes if it's really short-term stuff. Sometimes it can be days, weeks, or months within the long term. So we have this little period in here. It's got to make its move either up or down within this correction area and tell us, is this a real legitimate breakout? Because for no, the usual events is at least a move back down to the previous level of support. And the yes, of course, is a reach of the previous high and then breaking out above it and making new highs. And again, don't be surprised if the move beforehand has a fake one. So if it's going to go up, have some sort of play, something like that. Any type of break of key support that brings you the failed fast move lower, and then the failed move lower, and then the eventual and common fast move quickly thereafter. So now as we go back and take a look at this within these lines, this is Fibonacci retracement. The lows, well, if I go back in time, I see 17 as the low point, or 17 or 60, and either way it wouldn't make any real big difference. And then the big move, it just went way, way higher. That was a monstrous move. The lowest line would represent a 76.4% down correction. For this rally to be a legitimate one, it needs to hold the 61.8%. That's the 118 level. Anything in between this number becomes neutral, between these two lines of 118 and 389. So therefore, at this stage, it's battling between trying to be bullish or in the neutral territory. Above 389 is bullish because that's only a 38.2% down correction. 815 is a 23.6% down correction. And when you have monstrous moves like we've seen, that's when you can use these smaller numbers. For to calculate this, I do high divided by low. And in this case, I did 2,695 divided by 17. That got me 158.294. So the difference was 158 times from low to high. Within this is Fibonacci 61.8033. Multiply itself, gets this number. Multiply 61.8 again, you get 23.6. Multiply it again, you get 14.5. Multiply it again, you get 0.09. Once subtract 14.5 is 0.854. So 14.5% down is the same as 85.4% up. Same thing with 9% down being the same as 90% up. So the calculations came in at 1287 and 1707 for what works out to be a 9% down correction and a 14.6%. And when we look at these levels, the 815 has been perfect resistance on 2 occasions. And when we look at the 15 or the 14.6 and the 9%, what I'm going to do such is switch this on to say an hourly time frame. And then just go back in time to the situation in which it had its tremendous rally. So it'll load up the old data. There we have it. And here we can see the 850. Look at how often this thing has been hitting this level of resistance. Nice support again. So as long as Fibonacci keeps acting up like this, acting and just doing its job like I want it to, then I'm going to keep using it. 118, huge support at this mark. Maybe I should have done the 3-hour time frame over the 1 hour. It seems to be, I don't know how much it's able to load. Yeah, I'm going back to, I was thinking about going back to January because that's where everything went big. I know I'm going back to last June. So again, perfect resistance here at 815. If this doesn't work, there we go. Now it's going to work. Now at this time, these numbers you could not have known. You could be working with other Fibonacci's and all the Fibonacci upside. You probably noticed it would have done well. And it just seems to work when it's all said and done and key tops and bottoms have been in place, that they just seem to be at key areas. Because look at the 112.87 and how the market just consolidates a beautiful run. And when these things go, they go. So here we are consolidating down at around 800 on June the 1st. And then on June the 2nd in the morning, in less than a day, it pretty much has a move of like doubling. And then on a low on June the 2nd, 9 p.m. to June 3rd, noon, less than a day, it goes from 1200 up to this 2600 mark. So that's when you have that monstrous move. Oh my goodness, we're like way high for very short-term support using numbers like the 9 or the 10% Fibonacci level, the 9%. Well, it worked here. Support found, and then it looked like a 61.8% correction from this low to this high on just this move in here. And whenever you have these big moves, you're going to have these wild short-term swings. This is a short-term swing going from 16 to 23. That's a differential of about 700 points. It's almost 50%. And this is happening in like 4 or 5 hours at this time. And then we can see more support at the key fib. Has a very good rally. And look at the volatility again, leaving this low at 1823 and having a gain of well over 500 points. That's still 30%. And then this support here at this time, at this line, on June the 9th, comes up to the 18 lows at this point, breaks it, then resists it, and then heads lower. And we're right to this line. This one doesn't go to it, but it has a lower high move from here. And then we can see more at these levels, supporting this line, going down below it, coming back, resisting it, and so on and so forth. I'm not going to go further in time because obviously volatility shrinks and this is a 60-minute time frame. I'm already around the time frame I want to be for these videos because, again, I am calling them detailed altcoin analysis. And given that I have stated everything that I planned on talking about, and I think very well at that as well, I'm going to conclude this video. Thank you for tuning in. All the comments come in great. As long as you don't type in the words like airdrop or Odyssey, your comments are going to be fine. I get spammed by those comments, and that trick that I've used, and I'm going to show you something quick if I can.